Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Thursday, April 20th, 2023. The confusion with the count and the confusion with the markets continues. Both the S&P and the NASDAQ rallied early, got caught up in what they were doing, and then proceeded at about 2 o'clock to begin to sell off very strongly. And then in the last 10, 15 minutes, the market managed to regroup and rally 30 S&P points into the bell. So the situation in my mind, or in my opinion, remains the same as we have been presenting. And that remains that while we are looking for the whole pattern and the option block or strikes to begin to move lower from where they've been pinning it, which is basically right now between 4,100 and 4,200, and thought today, this afternoon, would have been a good start to that. The fact that it stopped and rallied that 30 points kind of lets me know that it's just not ready. Now, again, there are many factors from other indexes, particularly the VIX, that are pulling things in different directions as traders and firms lift hedges accordingly. So as volatility drops, they need to lift hedges because, again, what the volatility is producing is a big, huge shift in gamma. So again, we're still stuck with those same options being in control versus the opposite, where we would be looking for the index to be in control and put more in line as to where a market is going to finish the day, the expiration cycle, etc. Now, I have gone through and moved again the labeling, where I'm completing that final fifth wave up. As difficult as this is, as strange as the pattern is, it did diagonal, it did wedge, and so I'm marking Tuesday's highs as the completion point. But I'm not going to go above intermediate wave C because it's still unclear as to this larger triangle pattern that I've been following is not indeed not the one in force. So I'm leaving the labeling, let me just pull this out for 1 second, in place where that primary A is at the October lows. That matches up again with how I'm labeling the NASDAQ and would also match up to how I'm labeling the Russell. And so, and why I'm keeping those more inside of the same parameters in terms of a wave count is because of the overlapping stocks between those three indexes. And in fact, there are big overlapping stocks as well with the Dow and the NASDAQ, and those being Apple and Microsoft. So once we can convincingly be shown by the market that all the news has now been factored in, all the earnings have now been factored in, and we can make a move away from these higher levels. Again, I am not considering this move anything more than what it is in being a counter trend rally phase. Now, even if I complete this diagonal here, if I'm just labeling it as a straight ABC, then C is a failure. It failed to take out the high of wave A by about 50 S&P points. So again, coming back down to that hourly chart, and let's open it up a little bit. Even though I'm sticking that label on, the 5, and again, the minor 5 and that intermediate C, it could be the other, which would then shift the primary A wave over to the June low, and then take the S&P a little bit out of sync with the NASDAQ, which still pretty clearly is not in that same pattern and is moving, and this whole counter trend rally is really off of the October lows. So while that sits in process, I should say, between the ES, between which one of my quote unquote preferred counts is actually the one that is now finishing. Now, today, again, it did appear that we should have a fairly decent day in terms of the market heading lower. We spent the morning pushing. Then we dropped and then we rallied back. So let me just throw out what all of this could be. Now I can, on the hourly, work 1, 2, 3, 4, 5. So I can put a 1 there. And then this being a 2, but it's going to be difficult because it looks pretty much like it was a 5th wave or a 5 wave. Then we get another 1, 2, 3, 4, 5. This more is a 3, and then we're starting again. So giving the benefit of the doubt to the structure, I can say 1, 2, 1, 2. And then this decline was the kickoff of a 3rd wave. This push back higher does not necessarily fit into that. So, the beginning of the 3rd would come all the way down to 41.36, which is where we got down to today, 41.37 actually, and then rallying to finish up back at 41.58. So we got back into the zone that protects upside, an upside move. So in other words, we had a vol trigger down here that was triggered and then recovered. We had upside triggered and then failed. So there's so much going on right now that it makes it very, very difficult to pinpoint a short-term move. So again, we're going to need to leave open all these possibilities. The fact that the market is remaining thin, a little bit better volume today, but is remaining thin volumes and leaving open for when something bigger comes in, as it did this afternoon, it drops, and it dropped precipitously pretty quickly. So although it took 2 hours to get down there, it took less than 1 hour to get all the way back up there. So keeping all this in mind, I cannot call anything over. So as best I can, I'm going to start putting together some fibs. Unfortunately, they're going to be more to the downside. If I had to put together an upside fib, it's going to remain in the following. I just need to switch this around, put that on my extensions, and we're going to stick with what we've had all along, and that's just what the C wave can get to. Now, if I need to come down a notch, and I've got to try to put together a more bullish count, then I'm going to bring this down, open this up, and do as follows. If I'm counting this, and it ends up being that I've got to take this down 1 degree, then this is minute 1. And could very possibly, this whole balance here, be minute 2. Let's just call it that that's possibly what it is. So we need to look at where can a wave 2, a wave 3 bring us. So we go from that low to that high. There you go. Down to that low. So wave 3 then, again, being that it's just under Elliott guidelines, the longest and the strongest, most often, we now begin to look where wave 3 should come in versus wave 1. And we're looking all the way up here, 4,300. That would just be wave 3, right? Because wave 3 would be equal to 1.618 of wave 1. Wave 3 would be equal to 100% of wave 1 at 42.38 or 42.39. Now, mind you, I am not saying this is what it is because of how I've labeled, but I'm leaving open the possibility. This is such an undecided market right now, and it's truly just battling itself left and right and left and right. And as I've said before, when we're looking at the options and you are an options market maker or an options trader or even an options dealer, then you're trading things that, and you're doing zero DTE. These are all done deals and they settle in cash. So within the indexes, there's no threat of early exercise, etc., because it all goes off same day. It all goes off, done, deal, settles in cash. So when we're witnessing what they're doing, it's not like those traders, those firms are taking a bullish or bearish posture. They're just trading. The algorithms have their algorithm. They have their if-thens or whatever the goal is for the algorithm, putting together trades. It's basically based on premium. And whether that premium be in the put or be in the call can produce a trade. Trades are then hedged. And when they move, then we're dealing with the gamma, which will show us what happens to the position delta-wise for a 1-point move in the underlying. And then that is nothing more than, again, not making any statement as towards direction, but just hedging, making adjustments, lifting a hedge, putting a hedge back on. Then add into that the movement in the volatility indexes, and then what that produces. Even though yesterday was the vol expiration, today we still get fallout from that. We still get trading that comes off of that. As volatility gets sold, traders can lift hedges within certain levels, certain strikes, certain whatever. That again then puts a little bit of pressure on the market. And usually it'll come in the form of upside pressure, particularly when it's dealing with volatility. So putting that all together, we get into the situation that we're in. So I continue to be of thought that, again, whatever's going to tick this off, whatever's going to trigger it, it's going to be a surprise and a shock to the market. So while we felt that today could have come, the market seemed a little bit shocked that it was happening, forcing a lot of additional adjustments to be made as it started to break down. When I sit on the hourly chart, even if I kind of open it up, it just doesn't even look that bad. But it was pretty dynamic when it was happening. And so, in fact, let me just take you over to our other charts. That was the buying it back up. Let me just stick here and go down to a 2-minute chart and just open this up. That was reached that top, 41.71, and then they started to sell, and they didn't stop, and they didn't stop, and they didn't stop, all the way down to here. Then they bought it straight back up. So again, not that we broke anything from here to here in terms of it's just a pullback. It's just a bounce after this intense selling. I would think that it didn't actually even reach a 50% level. So again, I'm showing you, these are the things that we do to try to put some parameters around here. It actually almost got to 62%. That's a pretty strong move after it drops from 41.71 to 41.37. To run it all the way back, 62% of the decline. And doing it primarily, there you go, right there. It kind of came in right there. Look at that. In 12:52, that is Pacific Daylight Time. So that is 3:52 Eastern in 8 minutes. It's even better. In 8 minutes, it started at 41.42 and finished at 41.57. So the 8 minutes ran it, and that's even with a little bit of a sell-off in there. In 8 minutes, it ran at $15, $16. This is what the market is confronting. This is what it is doing. So how do you want to count that? How do you want to look at it? It becomes very challenging. So that's why I am going to say we leave all the possibilities on the table until the market lets us know, okay, we're done. Okay, we're moving lower. Okay, this is what the situation is turning into. So again, we're all going to need that additional information as to what's going to be the trigger, what's going to cause it. Because obviously what's happening internally now is not strong enough to force it down out of its range that right now it's been stuck in since the 6th of April. Excuse me. So again, for tomorrow, I'm laying out the fact that if it holds and we continue to rally, then I'm going to be looking for upside. And let me open this up one more time. So now there's the upside, right? We came back down, we slipped back down, and what do we got going on here? We have initial resistance 41.60. We have the 50 at 41.63, and that's the 50 period EMA. Then we have a little bit of a cluster, and that would be the 50% on that entire C wave at 41.74. And then we also have 41.75. So we got two right there. We'll call it 41.75. Then we have 41.87, 41.99, which again puts us at the previous high. And then we start to break to new highs. And that would be not necessarily getting above that A wave, which is at 42.53. That's all the way up here. Again, can the market do it? Technically, yes. Has the market been able to really get past 4,200? No. We're sitting here watching it. No. It gets up close, fails, gets up, fails. Now it's failing even at lower levels. But leave all things possible for right now. We want to be able to trade these moves, both up and down, as they're extremely profitable. They're very profitable. Unless, of course, today you were trading through Ninja and your provider was Rhythmic, which had a massive failure today. I don't know if they're either back online. I have no idea yet. But that kind of caused it right as it was getting ready to drop 40 S&P points. Rhythmic went offline, unable to trade. So now, if we were to get continued downside, what can that look like? Well, let's shift over and put on some extensions, but to the other side. So again, if we're looking at this being wave one of this first move down, then I'm going to put in my fibs for a third wave. So 1, 2. Now, open that up. And what we're looking at for a third is it's already equal to 100%. So that and that are already equal. But we'd be looking more for 4110. And in all honesty, I'm looking for this first leg to really get this market below 4100. If indeed the top is in. Why it's continuing to hang out up here would be like, I'm not sure. But here we are. So I'd be looking for the initial legs to get this thing below 4100 and actually continue and move it below 4,000. So let's put down another one, which would cover us if we go from this level down to here, up to here. What would that one tell us? Well, 100 puts us right there at that 4127. So we got 4127.28. There's one zone. And then we got 4121, 4116, again to this larger. To the smaller internal, we've got 4116, 4110. There's a double. Right on the nose double, where this third and this third could meet up. But for this to be the third, then it could be there and we get a 4 and a 5. For it to be this third, we can meet there and we get a 4 and a 5. It's going to get interesting. Now, on the outside, here we have 4100, and we have 4095, 4092. There's a second cluster. From 4099 down to 4092 is a cluster for both levels. So there's a possibility that this larger, slightly larger third and the internal third may meet up at the same point. Now, this one, the internal one, I'd expect to go up and then down and then back, go down, then up and then back down before this one finishes its third. Again, gets confusing, but that's how I'm going to put together the fibs to fit into that picture. Continued breakdown. I mean, if we get news or something comes in that's going to force this market lower, then yes, I am looking for it to really just drop and go right through all of this. But as long as we're sitting in a very tight range between 4100 and 4198 up there, we can tighten that up and call it to 87. We can tighten up again and call it 72. So the range is 4100 to 4172, 4100 to 4187, 4100 to 4199. Moving averages. Let me get rid of these for right now so we can see those moving averages. Look at that. All of that activity, and the 200 ends up flat on the day. The 50 still turning lower. The 20 still kind of turning lower. They all got close to breaking below that 200, except the 50. Continued downside, that should not be a problem for the 20, the 4, and the 8 to continue to break lower and then start pointing pretty sharply lower. Over in the NASDAQ, it's the same picture, but even a little bit more confusing. But here as well, I drew diagonal. It fits. It's a failure. What's the failure? That the fifth wave didn't take out the high of the third wave. I have been here before. Almost the exact same type of a deal where I was looking for, again, this completion point, and it just didn't come through. And we continue to roll around in a tight range. Nice trading range, but a tight range. Same thing, we rose up during the day, right at the top. If you got the sale, really great. And then it just slipped and it dropped very quickly. And here in the NASDAQ, it ended up what was that low? 13,000, let's call it 22. And it rallied back to 13,099. So it rallied 77 points in pretty quick fashion. All right, so here's the same deal. We have to leave open upside. So let's start rebuilding where we're going to have some fib deals. We still have that C wave. Those are here. So if I bring this back down to the hourly, we can see we have them here. We have 618 at 13,253. We have additional resistance at the area of that high, which I've labeled the top of wave C, and that is at 13,297, almost 13,300. And so, but now if we wanted to do some internals, it's a little bit too difficult to consider what this one can be. But if I had to build an upside, and to be honest with you, I'm not even sure how I would construct it off of here, other than we're going to have to start breaking back up towards 13,253. Right now, we'd find resistance at 13,200, and then again at 13,230. And then it needs to break there and keep on going. We have that stronger resistance up here at 13,460, I'm going to call it. And how it managed to get there, I'd have to extend all of this out again, and I'm not really sure what that would all entail right now, because it did come down in 3 rows up and came down and broke it again. Now, if I put it in to just the line chart, it's left us 3 down. So that's why, all things considered, we have to leave open the strong possibility that we're going back up. So, and that being the case, then I'm going to put the 3 up there, the 4 would end up over here, and we still got another 5. So if that is the case, we're going to look at it this way. Let me first do this. Put it back in the candle, and I'm going to look from here to here to there. So let's try that again. Here to here to, yep, there. We need to, we did start a good rally. It came down, put it equal the low. So if anything, this is going to be a 4, and that's 1 of 5, 2 of 5. So we're at that same stage. We were right here, same stage. We were right everywhere. We're going to work it out. So we've already gotten up close. So we still have 13,202. That's still resistant. And we have a cluster at 13,250-ish, a little bit above and below. Then we have 13,280, 13,309, 13,389, which is where wave 5 would be equal to wave 3. If that's going to be all moved over, right? And it produces a new high. So that's why that needs to stay alive. I'm not a big fan of failures. Yes, they do exist. Yes, they do happen, but not as frequently as it seems to be showing up, which is why I'm real hesitant. I was hesitant to actually put this on there, but I needed to show that there is that possibility. And the fact that it sold off pretty strongly fit as well. So for right now, and moving averages are flat. Everything is not looking, and they got that sell-off and that rally back. It keeps everything alive for an upside move. Now, we've got Friday, tomorrow, expiration. We have additional, let me just double check to make sure to see what possibly could be coming out tomorrow in terms of economic. We have the S&P Flash US Services, the PMI, manufacturing PMI, and then Fed Governor Lisa Cook is talking. in the afternoon after the market closes. So those are at 9:45 a.m. We have the S&P flash. Today's U.S. leading indicators, economic indicator, basically did nothing to the market. We even had Philly Fed, jobless claims, basically did nothing to the market. Continued to rally right on. That's right. Yeah, we're rallying. So I'm not really going to be expecting that the market's going to be paying attention to economic numbers. So there we have upside. Now, downside would be that we have, let me take that off so we can see very clearly. 1, 2, 1, 2, just like in the other. So I'm just going to go as far as this first one so that we can kind of get an idea of what the larger, slightly larger third may look like. We're looking at 12,848. And that would be just this 1, 2, and then a third, of which within that we have 1, 2, possibly again. But I don't want to clutter up the chart. So again, we got it all kind of coming into the same areas, and we're looking at ultimately for this thing to start to drop. First of all, below 13,100, below 13,000, and then down below 12,900. So a lot coming up. Again, if the volatility continues for tomorrow, there will be plenty of trading opportunities. They're not always as eager to jump into, because once we got through that strong upside move, and even during that strong upside move, there were just periods that the market just kind of fluctuated. Very small range, $5, $10 range, up, down, up, down, up, down, up, down, and waiting for the next larger player who needs to move a whole bunch, either to the buy side or the sell side, would come in and put on the trade. All right, this is where I'm going to end it. I know it's confusing. I get all that. Let's all get through tomorrow. I'm going to recommend, sticking to being a day trader. Swing traders, I do feel for you. It's a lot more difficult. But as a day trader, keep your rules together. Keep your trading plan together and handy as to what your trigger was. That's your entry. What your goal on the trade is. Be willing to shorten it. Be willing to make adjustments to it accordingly. And then, most important, where your stop is. The moves can be vicious, the moves can be quick, and the moves can move much further than you would anticipate. So always have your stop in mind, and actually, if you can, leave it in the physical market. All right, that's it for today. Our next update will be on Sunday, April 22nd.